Good evening, guys. Welcome back to Professional Business Solutions, the channel where I'm minding my business and yours too. I hope you all had an awesome day and are ready to receive some of the information that I have for you involving tax relief for those who were involved in a federal declared disaster. This does not just pertain to people who were in Hurricane Laura, but anyone who was in an area at any point in time during the year and it was considered a federal declared disaster area by the President of the United States. I spoke briefly on it last week for a few minutes and I told you guys what to expect. So what I did was plugged in some numbers into some of the forms that you should be familiar with whenever you are ready to file your taxes, whether it's a personal accountant or if you're doing it yourself. These are the forms that you will need to be familiar with whenever you are ready to do your taxes. Number one, you will need to provide at least three pieces of information that should go on these forms. That is your cost basis of the items that you lost, which means whatever the price was for those items. Now, this does not include a home that was at a total loss or a vehicle. Usually the homes are supposed to be insured, and if you receive any type of compensation or reimbursement, such as an insurance claim against any items or anything like that, that needs to be, the loss will have to be reduced by that amount of reimbursement that you receive. So you should remember that. But there are three pieces of information that you will need. That's the cost basis of the items that you lost, which is again the price that you paid for those items. You will also need to know what the fair market value was before the disaster, and also the fair market value, what would have been the fair market value after the disaster. Now, the fair market value means if you still have those items before the disaster and you wanted to sell them or get rid of them, and you put a price on what it was worth and someone was willing to pay you that price, that's what the fair market value of those items would be. If you purchased something for $1,000 and before the disaster it was worth $500, that's what the fair market value is. Now, the fair market value, the fair market value after the disaster could be as low as zero, which means it's not salvageable anymore. It's of no use and a total loss. That's what happened to me during Hurricane Harvey with the furniture that I had downstairs in my townhome. There was so much water in the townhome that the furniture was saturated with water. And by the time we were able to go back into the townhome to assess the damages, the furniture was molded and mildewed and soaked with water, and it was not salvageable at all. It could be of no use to anyone, and I could not sell it or save it. So I'm going to share my screen with you now so I can show you the forms that will be added to your tax return. Now, these are some numbers that I came up with that an average taxpayer normally would receive, or their income that they will receive from an average taxpayer. Of course, there are different rules and regulations that go along with this. So this is nothing that's set in stone. This is on a case-by-case basis because each individual's tax return is different. So the three forms that you will be familiar with will be your Form 4684, which is the form for casualties and thefts, and also a Schedule A. And a Schedule A is normally used for people who do itemized deductions on their tax return. But at this point, during a disaster, you are allowed to use a Schedule A if you have not been using a Schedule A, because this is where your casualty amount will go on this form. The other form that you will need, of course, is your Form 1040, which is the standard form that your tax return is prepared on. So again, I just made up a name and plugged in some numbers just so you can see in detail what it will look like. So what will happen at the end of the day, what will happen is you normally have a standard deduction. Let me get to that page on your 1040. And I'm using forms from 2019 because the 2020 forms are not yet settled and prepared for the 2020 tax season. So I'm using the forms for 2019. So they could be slightly different when you prepare your taxes for 2020, but not too much. The regulations and rules will still be the same, but the forms may be different because it is slightly different from 2017 when I did it up to 2019. So here it shows what your standard deduction is if you were single or married filing separate, married filing jointly, or qualifying widower, or head of the household, which the majority of the people are head of household. Well, some, I won't say majority, but a lot of people are filing head of household. And these are the amounts of the standard deduction that you get. Now, normally when people usually use a Schedule A on their tax return, that's because they have far more itemized deductions to take than they do the standard deduction. So whenever you prepare your taxes, you want to take the one that's more, that gives you a bigger deduction so you don't have to pay as many taxes. So, but if your itemized deductions do not outweigh what the standard deduction is that the government gives you, it's in your best interest to use the standard deduction. So again, use the one that gives you the biggest tax break. So we're going to be using numbers and filing as head of household so that I can give you a clarification on what your tax return will look like. So what you will do is, again, gather the information on the cost of the goods that you lost. You need to know what you paid for them. Here, I use things such as clothes, a couch, and a love seat. And it's labeled over here to the side, property A, B, C, and D. As you see here, you have the list here, A, B, C, and D. So we're using just A, B, and C just to make it short and simple. So line 2 states it asks for the cost or other basis of the property. That's how much you paid for those items. So for clothes, we put $4,350. For the couch, we put $999, which I transposed those numbers. That should have been for the love seat, but anyway, you get it. So for the love seat, we put $1,500. Okay, line 3 is where you will enter any insurance or any reimbursement that you receive for those items, because again, you will have to lessen your loss by that reimbursement. Line 4, also, if you receive any type of gain from this casualty or loss, you also have to put that on line 4, which means, again, if you purchased a couch for $1,500 and the insurance gave you $2,500 for it, that's called a gain because you received more for that couch after the disaster than you did when you paid for it. So you will also have to deduct that gain, but that's for more complicated tax returns. Number 5 is the fair market value, which I spoke of a few minutes ago. That's how much these clothes would have been worth pre-disaster. We put $2,500 here for the clothes, $800 for the couch, $1,200 for the love seat. On line 6 is where we put the fair market value after the casualty or disaster. None of it was salvageable. We cannot use any of it nor sell any of it. So we just put 0 here for each item for A, B, and C. Number 7 is just what it says. You just do calculations, subtract 6 from 5. We get $2,500 here. The next 3 lines are just calculations. Line 10 is a sum of all of these items here together. If there's 3 different types of disasters, I will not go into detail about those because it does get complicated. Again, when you pose this to your tax preparer, I'm sure they will know what to do, what rules apply to the loss that you have, and so forth. So really, we don't need to go into detail with that because it may just confuse you. But for this time's sake, we plugged in 500 here because there was a rule that applied to this disaster on this tax return. Number 12 is just more calculations. We take the 500 out of the 4,500, end up with 4,000. And then we get down here, let's jump down to line 15. Line 15, we have all this information here. Again, it's just nothing but another calculation. At the end of the form, we ended up with $4,000 in losses for just clothes, a couch, and a love seat. This line goes on your schedule. The amount on this line goes on your schedule A, which is here. It goes on schedule A, line 16. Now, as you notice, this number is far higher than the number that we have on our 4684. On the form 4684, we only have $4,000 in losses. What happens is you take that $4,000 and you have to add it to whatever your normal standard deduction would have been. For this tax return, we're using head of household. The normal standard deduction for head of household is $18,350. So we add that $4,000 to that. Now you have a standard deduction of $22,350. That's this number here. This number then goes on your 1040, line 9. So as you can see here, what happens is you get a larger deduction. You have more added to your standard deduction, which reduces the income that you made for 2020, which also reduces the amount of taxes that you owe on your income. So that is the purpose of making sure that you file, if you had a loss in a federally declared disaster, report that loss because it in turn lessens the amount of income that you have, which lessens the amount of tax liability that you'll pay, which could also in turn give you a slightly larger tax refund. Or if you normally owe taxes, it will slightly reduce the amount of taxes that you owe. So here we just subtracted the $22,350 from the 45. So now your taxable income is $22,650. Sorry. So that goes over also to your page 2 of your 1040. Actually, it doesn't go over on this form. You have to now go to your tax table, which I already have it pulled up here, and you search for the amount of the $22,350. Let's see. No, $22,650. $22,650 is your taxable income. So we go over here to the tax table, and we find $22,650. And it's here. We gotta zoom in a little bit. Let's see what happens if I put my glasses on. $22,650. $22,650. And you know what? I did the wrong calculation. And we're following head of household. So that tax bracket falls under $22,650. So the amount of tax that you would owe on $22,650 is $2,444. I need to change that over here because I took a single tax table for a single person. Okay. So if you did not add that disaster in there, your taxable income would be $45,000 minus the $18,350. It would be $26,650, which on the tax table, that would make your tax liability 26,000. $2,924. So it'd be slightly higher, your tax liability. So what that did was listen how much taxes that you owe on that $22,000. And then here I just plugged in $2,000 for child tax credit, 13B, still $2,000. Then you subtract the 2,000 from the 24,444. So if you have children, we put 2,000 in for child tax credit. That also lessens your tax liability even more. So now you only owe $444 on $22,000 worth of income instead of $2,000. We put here that they took out $3,500 out of your wages for the year, which is on your W-2. And we put that you got $4,250 in earned income credit. That's for having children. And 4,250. So 4,250 and 35. Okay, 775. D, 4,250. Okay. So now, if 19 is more than 16, yes it is, so you do get a refund, and your refund amount will be $7,306. So there it is. So again, the reason for filing your losses on your tax return, it gives you a small tax break. It lessens your tax liability for the year slightly. It can also give you a slight return, tax refund, sorry. And also, or it can reduce the amount of taxes that you owe for any taxpayer that normally pays or owes the IRS. So I hope it was not too much information to you for you to retain. And again, become familiar with these forms. Whenever you present this to your tax preparer, make sure to ask them also, are they going to charge you more money for adding these forms to your tax return, so that you can also be aware of that. Because I know when I used to work for Jackson Hewitt during the tax season, we would charge extra for any extra forms that needed to be added to the tax return. Well, I didn't charge extra, they did, but I had to input the data. So again, I hope this is very helpful for you. Continue to watch the channel. I will have more updates coming up. If I find out anything else about tax relief again for the federal disaster declared areas, I'll let you know. But other than that, please subscribe to the channel, share the information. Sign up for notifications as well. I am about to start my seminars and my workshops, and I also will have them on my formal website, which is www.pbs-thesolution.com. And also check out my YouTube page, and it's under Professional Business Solutions, and sign up and subscribe so that you get the notifications. Again, thank you for your time tonight. I hope you all have a blessed night. Thank you.